Today, the digital cash tussle accelerates. Hello again, it's Martin North from Digital Finance Analytics. Welcome to the latest post covering finance and property news with a distinctively Australian flavour. This week, PayPal, according to some, have broken the crypto mould. As featured recently in our shows, there is a rising tension between the world of cryptocurrencies such as Bitcoin, the emerging stable coins such as Libra, and central bank digital currencies, all of course set against the current so-called fiat currencies, which many would claim are being debased by idiotic central bank money printing. And of course, rumours of an IMF-led planned shift to a new digital currency continues under the umbrella of a new Bretton Woods-type agreement. So, what do we know? Well, 80% of banks worldwide are actively exploring central bank digital currencies, according to a recent Bank for International Settlements report. The BIS, of course, is the central banker's central bank. The benefits of the growing interest have been recognised by the International Monetary Fund, which believes central bank digital currencies can lay the groundwork for highly efficient payment systems, ones that promote financial inclusion. Speaking at a conference at the London School of Economics recently, Tao Zhang, IMF's Deputy Managing Director, lauded these initiatives as potentially leading to simpler financial regulations. Zhang was also frank that they could replace stablecoins, which are difficult to regulate. However, the rise of central bank digital currencies could also lead to disintermediation of banks as consumers move their money into them. This might force banks to increase deposit rates, which would in turn lead to less bank credit extended and higher rates of interest. Central bank digital currencies could also be costly for banks, who would have to be actively involved in many steps of the payments value chain, such as building front-end wallets and monitoring transactions. Meanwhile, a single glitch or cyber attack in any part of the value chain could upend its reputation. For businesses, there would be a number of benefits in moving towards digital currencies. Transactions can be conducted directly without any middleman involved, making them faster and more cost-effective. Because cryptocurrency transactions are supported by blockchain technology, transfers cannot be reversed or cancelled after being made. This means greater security and reduced fraud. And Bitcoin has 5 unique features. It's decentralized because the computers mining the Bitcoin are not in one location. It's limited to 21 million Bitcoin. It is authenticated by machines that preserve the privacy of the owner. Its consensus algorithm are synchronized, and each mined block contains information from the previous block, thus making it immutable. Plus, it's both an instrument of exchange and a store of value. But Bitcoin and other cryptocurrencies also pose a threat to the financial system, according to the BIS. In its discussion paper, it made the point that crypto assets were highly volatile and presented risks for banks, including liquidity risks, credit risks, market risks, operational risk, money laundering, and terrorist financing risk, as well as legal and reputational risk. Central banks are under pressure to develop their own digital currencies to remain relevant and keep up with innovation in the financial system. They want to maintain their control of the financial system, and some are suggesting that the United States and China are about to become involved in a digital currency arms race. Certainly China made the first move this month when its central bank issued 10 million yuan of digital currency to 50,000 people in Shenzhen through a lottery. This is part of a trial for a new digital currency electronic payment. Making this digital currency available across all of China's mobile apps, such as WeChat and TikTok, could give China a competitive advantage in building a global currency. Meantime, Facebook announced in June last year that it would launch the Libra digital currency with a goal of making payments easier and cheaper. But now Facebook is reportedly rethinking its plans for its own digital currency after resistance from regulators by now considering a system with digital versions of established currencies, including the dollar and the euro. The Libra Association, which Facebook founded to create the currency, said the plan will include Libra, but The social network's digital wallet is now expected to launch later than initially planned, although the firm did say that Facebook remains fully committed to the project. Its partners in the association include Lyft, Spotify, Shopify, but several other high-profile members such as Visa left after the idea was criticised by authorities. In a statement, the Libra Association said it has not altered its goal of building a regulatory compliant global payment network, and the basic design principles that support that goal have not been changed, nor has the potential for this network to foster future innovation. But again, remember the BIS warned cryptocurrencies such as Libra pose a risk to the global financial system. And so now to the news this week that PayPal has entered the cryptocurrency market, allowing its customers to buy and sell Bitcoin and other virtual currencies using their PayPal accounts. This has really shaken things up. The other cryptocurrencies to be added first will be Ethereum, Litecoin and Bitcoin Cash, which is a spin-off of Bitcoin. PayPal plans to roll out buying options in the US over the next few weeks, with a full rollout due early next year. Those virtual coins could then be used to buy things from the 26 million sellers which accept PayPal, it said, and it could be stored directly within the PayPal digital wallet. As part of its announcement, PayPal said it was aiming to increase consumer understanding and adoption of cryptocurrency. As part of this offering, PayPal will provide account holders with educational content to help them understand the cryptocurrency ecosystem, it said. And PayPal has one of the largest merchant networks in the world. When it comes to using the virtual coins, PayPal will convert the cryptocurrency into the relevant national currency. So the company being paid will never receive the virtual coins, just the correct amount of pounds or dollars. PayPal said the system meant there would be certainty of value and no incremental fees. Using Bitcoin to pay an ordinary merchant is not due to launch until early 2021. But let's be clear, PayPal will not actually be allowing anyone to transfer their crypto out of their PayPal wallet into another wallet, even if it's another PayPal wallet, or to deposit crypto from another wallet. Users won't have access to their private keys, that's the long string of numbers that allows users to spend their crypto on what they want. Instead, everything has to go through PayPal. And although PayPal says it will allow its users to pay with crypto at its 26 million merchants on its platform, those merchants won't actually receive the payment in crypto. It will be converted back into fiat for a hefty fee on 2.3% on transactions of less than $100. This is not PayPal's first venture into the area. The firm was once a partner in Facebook's digital currency Libra, but became the first to pull out of the alliance just a few months after it was announced. eBay, Stripe, MasterCard, Visa, and others followed suit. According to PayPal, their move will help grow the global use of virtual coins and to prepare the firm for a future where there are more coins in play in the care of central banks and corporations. The shift to digital forms of currency is inevitable, bringing with it clear advantages in terms of financial inclusion and access, efficiency, speed and resilience of the payment system, and the ability for governments to disburse funds to citizens quickly, they said in announcing the move. So PayPal wants to make money every time you buy or sell cryptocurrencies. There are no service fees when buying or selling cryptocurrency through to December the 31st, 2020, and there are no fees for holding cryptocurrency in a PayPal account, they said. Currently, you can only hold the cryptocurrencies that you buy on PayPal in your account. Additionally, the crypto in your account cannot be transferred to other accounts or off PayPal. There's no way to downplay those limitations. PayPal's implementation completely defeats the raison d'etre of cryptocurrencies. Cryptocurrencies promise decentralized control directly, in contrast to centralized banking systems. If you already own a cryptocurrency, you can't move it into PayPal for spending. And if you purchase a cryptocurrency on PayPal, you can only access and use it with your PayPal app. PayPal wants to be the central authority of cryptocurrency bought, sold and used on its platform. Well, that's worse than fiat, isn't it? PayPal won't let cryptocurrencies leave your account. That said, the company does hint that this could change in the future. Notice the phrase Not at this time in these answers. Will PayPal support peer-to-peer crypto trades? Not at this time. PayPal only supports the purchase and sale of cryptocurrency using our PayPal account. To complete peer-to-peer transactions with PayPal, all crypto assets held with PayPal must be sold and thus converted into US dollars. Can I use my crypto assets as a funding source to pay merchants? No, users cannot use crypto as a funding instrument for commerce at this time, though this is planned for 2021. Crypto assets can only be bought, sold or held in the PayPal wallet at this time. To pay merchants or complete peer-to-peer transactions in PayPal, all crypto assets held with PayPal must be sold and converted into US dollars. That means merchants can accept crypto payments from customers without having to actually deal with virtual currencies themselves. It's possible the company is moving cautiously for regulatory and/or security reasons. PayPal has been granted permission for its operation from the New York State Department of Financial Services in the form of a conditional BIT license, the first such license granted. To begin with, the service will work with an existing cryptocurrency provider in the US, the Paxos Trust Company. PayPal isn't the first big name in tech to jump into the crypto bandwagon. The Robinhood trading app has allowed crypto since 2018, and Square users have been able to trade in crypto for over a year. Other payment firms, such as Square's Cash App and Revolut, have already offered cryptocurrencies for sale. But PayPal's entrance into the arena is eye-catching, largely because of its size and scale. With 346 million active accounts, more than $222 billion in payments processed during the second quarter, and tens of millions of merchants on the platform, PayPal offers yet another bite at mainstream credibility that it has often struggled with, due largely to its historical popularity just among cybercriminals and cybercurrency. But even if PayPal doesn't at some point change its implementation, the embrace of cryptocurrencies will be a boon for the market. The announcement alone has likely sent the whole financial industry, from big banks to tiny fintech startups, scrambling to respond. Moreover, PayPal isn't alone in its attempts to make a space for crypto on widespread mainstream rails. PayPal's announcement follows an announcement by Visa and Tussle of their collaboration to help crypto companies and fintechs come to market with crypto payments that ultimately ride on the Visa rails and are therefore accepted by any business or merchant that accepts Visa online or off. The big names in the payments game are increasingly opening up to let crypto, with lots of controls, into the wider ecosystem. They envision a future where the blockchain rails that underpin it are finally connected to legacy financial providers. Once that happens, the digital payments ecosystem as a whole will be able to more fully push the use of cryptocurrencies or even digital fiat currencies issued by central banks. Visa was once hesitant when it came to crypto and held off before offering its full blessing, but today Visa is now looking to lead the pack. And with PayPal's new announcement and added capability coming in a few short months, it seems like Visa isn't alone in seeing cryptocurrencies' potential as a spendable asset instead of mostly just a tradable commodity. But the question remains, what do consumers actually want from crypto? They don't pay for much with crypto today, a fact easily explained by the reality that not many merchants actually accept it. That, care of major names in the payments game like PayPal and Visa, looks ready to change, as merchants can now offer the method without having to take on the friction of converting crypto into fiat themselves, which means the spotlight falls to consumers and whether they are now going to pay with crypto. And that, by some accounts, seems to be a pretty open question at the moment. Some crypto formats, Bitcoin most famously, tend to be very volatile, which is likely to chill enthusiasm for them as a commercial vehicle, since overnight changes can mean the goods bought with a Bitcoin today could end up by becoming more expensive tomorrow as the price of the currency itself changes. And cryptocurrency remains mostly a niche product. Most consumers don't know much about it or express much interest in its use. That says, and as PayPal alluded to in its statement, could change, particularly if crypto starts being issued by central banks and major corporations such that it becomes a more recognizable part of financial life. The recent upgrade may not convince many consumers today, but perhaps it might take them to a place where they will be more ready when the killer crypto product comes along down the track. So reaction has been mixed, with some saying PayPal as a crypto exchange seems a bit odd, and the Bitcoin price remains volatile, so will this extend beyond existing crypto holders? And there's a famous mantra about not your keys, therefore not your coins. And Bitcoin is all about disintermediating trust, but it still needs a trusted intermediary, PayPal, which does seem very strange. Once someone learns a bit more about Bitcoin, perhaps they're highly unlikely to want to hold significant balances on centralized services without the ability to take ownership. But others are calling this the most bullish news we have seen in the cryptocurrency space to date, because PayPal is the biggest company yet to support buying and selling cryptocurrencies. PayPal, one of the largest payment companies in the world, has a market capitalization of $240 billion US. Not only that, but PayPal wants its customers to actually buy goods and services using Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. So that is a huge green light. PayPal has 305 million active accounts in more than 200 markets. The potential increase in cryptocurrency adoption here is massive. PayPal's pledge to support cryptocurrency as a funding source for 26 million merchants will likely benefit mass cryptocurrency adoption more than it will boost the payment firm's bottom line, according to Morgan Stanley, who claimed the move should expand crypto acceptance online, which to date has stalled at around 1% of the top 500 internet retailers. It is unclear, they said, if PayPal's earnings will benefit from that shift. The researchers said Bitcoin, Bitcoin Cash, Litecoin, and others is likely immaterial to earnings. Assuming PayPal is able to scale its crypto trading activity to Square's current level, it would only add about 0.3% of growth to PayPal's $21.3 billion revenue base for 2020, they wrote. And the reason is boosting crypto acceptance doesn't necessarily mean greater transaction volumes. Other upsides of supporting crypto include staying competitive with Square and attracting a new user base to PayPal, the researchers said. And analysts at JP Morgan have calculated that taking Square's Cash App and the Grayscale Bitcoin Trust together, US millennials purchased around $683 million of Bitcoin in the first quarter and $1.6 billion US in the 3 months to June. Analysts at Morgan Stanley said PayPal would have seen the fact that Square generated about $17 million in fees from Bitcoin passed through on its Cash App platform. PayPal's acceptance of crypto as a funding mechanism should expand crypto acceptance online, which to date has stalled at 1% of the top 500 internet retailers, the Morgan Stanley report said. However, it is unclear whether greater crypto acceptance will translate to greater volumes on the PayPal wallets. Nevertheless, this offering allows PayPal to remain competitive and could bring a new user base into the PayPal ecosystem. Now, some are saying that the decision by one of the biggest payment companies in the world to allow customers to buy, sell and hold Bitcoin is yet another example that exposes Bitcoin deniers and cryptocurrency cynics as being on the wrong side of history. Bitcoin reacted with a price hike, at one point trading at its highest price since July 2019. This is definitely a bullish sign for Bitcoin and other cryptocurrencies. Crypto is all about trust, and PayPal has a very high level of trust with its users. It has helped many people do their first web and mobile-based transaction in the past 20 years. So from outside the industry, this may be seen as a positive for the credibility of Bitcoin, but from within the industry, this is perhaps just another company offering exposure rather than allowing for sends and withdrawals. Of course, this goes against the general Bitcoin ethos of being your own bank. but it is a potential step in the right direction as long as their long-term strategy is to open sends and receives to allow you to move Bitcoin outside their system. But regulators around the world will be watching this development closely because there are entrenched negative views of Bitcoin because of its use in cyber fraud, money laundering, terrorism financing, and ransom demands. And as the AFR noted, in Australia, the preferred solution for the low-cost real-time movement of money is the new payments platform, which is being built by 12 authorised deposit-taking institutions at an estimated cost of about $1 billion. Federal government confidence in MPP, though, is unclear, given that Treasurer Josh Frydenberg this week appointed lawyer Scott Farrell to review the regulatory architecture of the Australian payment system to ensure it remains fit for purpose. Frydenberg said the regulatory architecture must promote innovation and competition to ensure that costs to businesses are minimised, consumer experience is enhanced, and there is confidence in the security of the system. And of course, innovation is often in the eye of the beholder. Buy now, pay later is held up as the shining light of innovation in payments, even though it is simply riding off the back of infrastructure built by Visa and MasterCard and charging merchants hefty fees. Afterpay charges merchants around 30 cents fixed transaction fees plus a commission on the sales ranging from 3 cents to 7 cents, which is much higher than the cost of taking payments from credit cards. Its rival Zip charges merchants an upfront fee of 4%. Nevertheless, the arrival of Buy Now, Pay Later has unleashed competitive forces, including forcing at least 2 banks to develop interest-free credit cards that charge a monthly fee. And you could perhaps expect similar propagation of competition and different digital solutions to emerge from the latest moves by PayPal. What you can say for sure is that the digital currency payment battles have only just got started, and there could be potential benefit for consumers and households, but on the other hand, a lot of these players are positioning to maximise their own revenue and their own returns, irrespective of whether it's actually better for you and me at the end of the day. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.